Locked, and we are here at the month end, and also we are have one hell of a move to talk about here in the US dollar JPY. If you haven't been paying attention to the Forex markets today, the US dollar has been taking quite a blow against the majors, especially the Euro, US dollar, and the US dollar yen, and the bears are just relentless with the trade today. So what we'd like to do before we start getting into the analysis is just show you, pull up our disclaimer, just so once again to let everyone know this is for illustrative purposes, and it's all the basic disclaimers that you find on any type of financial website. And now let's pull up the chart that we want to look at. This is the current US dollar JPY chart, and if you take a look at how things are shaping up, you can see that the market has just gotten pounded today. So the numbers that came out today for the US dollar set off the bears, and there's lots of selling going on just for quarter end, and actually not for quarter end, for month end. You would think that this would have been possibly a little bit of a sell-off, one or a rally one way or another to get some profit taking or unloading of the balance sheets. This is more than just a balance sheet unwinding right now. This is definitely a bearish move. Probably has something to do with the fact that the U.S. Put the tariff threat on Mexico. So that definitely puts the dollar in play. Even though the peso is as a lesser currency cross, it definitely is part of the trade zone that the U.S. is very active in, whether it both be in imports and exports, and as well as manufacturing and trade across the border. It also impacts the Canadian dollar as well. So right now we just like to look at where the slope of this trade has been lately. Since the end of April, pretty much beginning of May, the bears have had full control over the US dollar yen trade. They have just pounded this market. And the weakness has been for many reasons. Some of it has to do with the U.S.-China trade tariff disputes and what have you. And this could be the compounded sell-off today between the China and now you have the Mexican tariffs, that in the short run the traders are very bearish the dollar. So is this going to be a long-term impact? Probably not, but definitely going into the end of the month, it sure makes for good news, and we're setting off the week with a very, very negative ending as well. So there's still a little bit of time left in the market before it closes, but I highly doubt that we're going to see a big rally. Now, if you see where the large break is today, it took out the channel line where the market's been basically slowly decaying over the past few months. Now the steepness you can see from the other blue line shows you how sharp of a slide this has been over the past month, just over a month, basically 5 weeks of trading. Now the lower yellow horizontal line there at 108.142 is a very, very strong support line that is from the weekly and monthly charts. I would expect that since this slide has taken this market down so hard that there's probably going to be a little follow-through going into next week, from Sunday into Monday and Tuesday's trade, especially now that we're coming off of the holiday week in the U.S. You're probably going to see with the new month and any of the reaction to the news over the weekend that there'll probably be a little bit of follow-through on this move. And 108.142 is going to be where I would say you're probably going to see the migration to, and then it's going to level off most likely. Now, this is going to be a low. I doubt it. Probably just going to chop around there and set a lower range. The steep sloping blue line that you see there, that's where we want to gravitate to, but that's going to take a week or so unless there's a monster rally, which right now probably is not going to happen. I would expect volatile ranges probably going into Monday through Wednesday into Thursday of next week, depending on how the numbers are and how they turn out. But with this type of a slide, and especially coming down on this major support, I would think that you're probably going to see a little bit of a profit-taking rally. And especially as the news subsides on the U.S. dollar right now, everyone's jumping on the pounding the dollar bandwagon. So that's probably getting a little overzealous sell-offs and rallies depending on the currency cross. With this follow-through to be expected most likely on Sunday into Monday, like I said, especially if the news is reinforced. But then it will start to wane. I don't believe that this is just a major trend thing. There's other reasons for the U.S. dollar yen to be bearish and for it to have been trending lower. Definitely the U.S.-China trade, the tariff war is definitely impacting it, as well as the price of oil as well. That's been a big deal as well. So now with oil getting cheaper and back down into, I think it was the 54 level today in the front on the contract, I think that you're going to probably see a little strength in the yen continue. So these are forces that as the U.S. dollar all of a sudden starts to get stronger again, it's going to level off. So the U.S. dollar yen trade is probably, if it starts to set a bottom over the next week or so, it's going to be more of a bottom for where it's going to be range bound. I would say that your two yellow lines here, the 108, 142 price target that we have to the downside, and then above it to the 109, 714, that's probably going to be the highest probable range where you're going to see the market trading over the next week and a half, 2 months, actually into the next month. And I would say that because as we're heading into the summer and we have a lot of extreme news that's come out over the past week and a half. You have what happened in the UK with the change of power from Theresa May resigning, and now you have the up spike in the tariff disputes between China and the U.S. and U.S. now in Mexico. Who knows who the U.S. will throw in again, but we also know that every time there's a bargain going on, there seems to be some backdoor concession somewhere else, and it all levels off. The numbers also, the economic numbers have come out over the past week, shocking a little bit to the upside, so a lot of the doom and gloomers that are out there are not getting the negative responses that they're expecting and projecting right now. Of course, when you're anticipating lower expectations and you're trying to lowball these kinds of numbers, it's very likely that you're going to be wrong, in which then all of a sudden the market looks a little bit better than what they've been touting it to be in. So right now, looking at this chart once again, the market still has about another half an hour to 45 minutes before it starts slowing down or closing before the weekend, depending on whether it's the equities, the currencies, and whatever other derivatives are trading currently still this afternoon. So with that being said, I think that you're going to see the bears keep on they're going to be all offer on this trade going into the weekend. And then once again, Sunday, you may see the market dip down where the shorts are actually getting a nice little freebie layup going into the weekend, where the market might end up opening a lot lower and then still rallying back to fill the gap, which means then you're going to have a lot of weak shorts that are going to get squeezed if they try and get short on the Sunday night trade. So expect volatility, and I would say that don't look for the 108, 142 necessarily to be a low, but it's probably going to be a gravitation point where you're going to see a lot of little choppy trading around, and then you're probably going to see a little bit of a corrective move back to the upside, back towards the 109 even level, with 109, 714 being the extreme to the upside for any overzealous correction. Like if you look at the steep sloping line right now, in the middle of it, you see that one little upside correction where the bulls had a nice little relief rally there, taking some profit, but there was nothing that they could get. They couldn't even fill the gap up there. So eventually that gap will be filled, but I don't think that's going to happen for quite some time yet. And I would look for the market to be bottoming and range trading more than setting up any type of reversal of trend whatsoever. And so if it does start to get a little corrective rally, like I said, look for that to be a short-lived rally. Don't try and work that as a in on a very long-term buy. I would say most likely anything you see to the upside will be a corrective rally in nature and will be a rally to sell, or at least take a little profits and then wait for a signal to either get a valid buy or extreme sell signal as the market sets up a little digestive phase. And with that, we hope you liked this analysis today on the U.S. dollar yen as we're closing out the week, and we'll have more for you as the days and weeks come ahead. And if you like the analysis and what you heard here, you can always check out the book I wrote, High Probable Japanese Candlestick Patterns. It's available on paperback and Kindle on Amazon.com. And with the information in there, you can find all types of buy and sell patterns and continuation patterns that have been used for over 400 years to help traders get a competitive edge and put the odds in their favor. These patterns work in the Forex markets, the futures markets, the stock markets, the options markets, ETF, all kinds of markets that can be used for, or to signal one market so you can have a correlation trade in another. So these are all things that are covered in the book. So you have a good weekend, good luck in your trading, and follow, and share us, and help support Forex Trading Unlocked on Twitch. Thank you very much. Take care.